guys were able to attend. Firstly, I appreciate your attendance. Um, the other thing that I would like to mention here is that, guys, when we teach technicals, we also speak of fundamentals. Okay, when we talk of fundamentals, we have to always ask ourselves what drives the market to actually go up and down. Okay, and we need to also understand the money flow, the global money flow. How does it go about? You understand? Now, I'm just gonna show you a short, maybe a 10 minutes presentation, just a 10 minutes presentation, just to show you how powerful fundamental is. If you have the fundamental knowledge and like, guys, fundamentals are the basis of a bias. Okay, if you want to know where the trend is going to go for the next 3 or 6 months, you better have your fundamentals with you. Like, you need to know what makes the market to move up and down. Number one, whatever that you have been hearing from the internet. I know, Mr. Kutlano, maybe you are familiar with these guys. Mr. Gideon, maybe you are familiar with these guys who call themselves, I mean, their names, we have Tsekeleke, DJ Coach, we have Ref Wayne, we have all these guys, we have all these guys who are busy saying fundamentals is fundamentals is the calendar. Guys, let me just share my screen with you and just show you the difference between the two. Okay, can I do that? Okay, thank you very much. Thank you very much. I'm going to share my screen with you now. Okay. Mm, I need you guys to tell me when you can see my screen, okay? If you guys can see my screen, tell me. Can you guys see my screen? Okay. Okay. Now, I'm just going to be making an example, okay? I'm just going to show you an example, and it's not like I need you guys to know this. When we teach you these things, you also need mentorship. You can have the basics of the technicals, but how to read fundamentals, how to actually interpret the monetary policy, it's very crucial. You need to be able, like, you have to know what is, what does the bank focusing on, like when they're talking about expansionary monetary stance, or when they are talking about contractionary monetary stance, or when they say we are buying bonds, selling bonds. You need to actually know what are they saying. You need to also know when they have the problem for inflation, employment, what are they going to do. If they say we are going to increase employment and also maintain inflation, you have to know what is their main goal. Okay, guys? Now, as I'm left with few people, okay, it's fine. Now, here's what we're going to do. I want us to look at the date of this. If you can see the date, please tell me. It's the 4th of June. This statement was released on the 4th of June. Okay, which central bank are we talking about? The European Central Bank. What currency is it going to affect? Euro. Are you guys understanding me? So when we're looking at ECB, European Central Bank, Exactly. So we'll be looking at euro pairs. Okay? But Mr. Glenn, I need you to know that there's a lot that evolves around this thing. You cannot just read a statement and be like, okay, expansionary monetary stance, and then boom, euro is going to be weak or is going to be strong. No, 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 no. You also need to know about the next currency, and you also need to know what is the European Central Bank, the euro, is it a service or manufacturing economy, or is it a commodity economy? What is important to them? How do they make their money? Okay? And you'll find out when we start our course, we don't start teaching you guys all these things, especially when it comes to fundamental. No, 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 no. We have to start with what is money. What is money? Because what are we dealing with in foreign exchange? Can somebody tell me what is the main thing that we are dealing? What are we actually doing in foreign exchange? Exactly. We are doing currencies. We are buying and selling currencies. Currencies is money. So you need to know, how is this thing created? How is this thing destroyed? How is it going to be supplied? How is it going to be contracted from the economy? Okay, now just a short example. Exactly. You are right. So we are buying and selling money, actually. We are buying and selling money. Simple as that. Okay. Now, here's an example, guys. I am going to give you some few explanations on the terms that they are using here, okay? And I need you guys to listen to this thing very carefully. If you have to take notes, please take notes. If you want me to repeat something, tell me, okay? Because it's very important for your trading. You need to know these things. It's just going to be a short presentation. Now, here is the statement. They are saying it was the 4th of June. They say today's meeting, the governing council of ECB took the following monetary policy decision. Okay? Now, the development for the pandemic emergency purchase program, PEP, will be increased by 600 billion to a total of 1,350 billion in response to the pandemic related downturn revision to inflation over the projection of horizon. The PEP expansion will further ease the general monetary stance. Already they told me what is going to happen. Now, let's just talk about something, guys. Let's just talk about something. Uh, Mr. Kutlwano, you having a company, your company maybe is let's say is Nasdaq, okay? Let's just take Nasdaq is your company, right? And it's an investment company. Let's just put it in that way. And then here is Mr. Charles. Mr. Charles, you have your company. Your company, let's say, is Bitcoin, okay? Let's just say your company is Bitcoin. And Bitcoin, okay, just a few minutes, guys. I'll be with you now. I'll be okay, sorry about that, guys. So now when we are okay, yes, another client, Vivian. Okay, now I said, Mr. Kutlano, you have your company is called Apple. Your company is Apple, and Mr. Charles, your company is Bitcoin, right? Both these companies, they offer investments. Okay, that's an example. Both these companies, they offer investments. Now, Mr. Kutlano, you say to us, okay, people, if you invest with me, I'm going to give you 5% of interest every month. Okay, and then Mr. Charles says, if you guys invest with me, I'm going to give you five. I am going to give you 2%. Okay, Mr. Kutlano, you offering how many percent? How many percent are you offering? 5. Mr. Charles, how many percent you offering? 2. Okay. Now, guys, I need everyone to answer me. If you are an investor, generally, where are you going to invest your money between these two companies? Who are you going to invest with and why? Okay, okay. Mr. Clan says 5. Mr. Charles says 5. Okay, exactly. Because more money, that's where we make more money. Okay, investors, they seeking for opportunities to make more money. Okay, now when investors hear that, Mr. Charles, you're decreasing your interest that you are offering us, what are they going to do? What are they going to do? Are they still going to be with you? Exactly. Okay, Mr. Kutlano. Exactly. Yes. Now, if it happens that Mr. Kutlano says, okay, now I'm going to offer you guys 1%, and then Mr. Charles, maybe let's say he remains in 2%. Obviously, I wouldn't stay with 1%. Okay? I would just take my money and be like, okay, since I've made profits maybe for the previous months, and I've read the statement of this company, they say they are going to offer us um interest 1% for the next coming months, but then they are not going to apply that rule now. They are going to apply that maybe in the next month of June. How long are they going to do this? It depends on the company. Maybe they want to make it for like 6 months or 3 months. It's up to them. Okay, now what will investors do? I'm gonna take my money because I've made money from uh, mr Mr. Kutwan. So I'm taking now my money and like, now I'm going to Mr. Charles because he's offering more, obviously. That's what Forex is mostly about, guys.